Hello, chart watchers, and welcome to this Wednesday, October 10th, Market Watchers Live Show with your hosts, Tom Bowley and Erin Swinland. For those of you joining us for the first time today, welcome to the show. And for our regulars, welcome back. Almost don't want to do this, but let's take a look at what's going on today. Got the Dow Jones Industrial Average down another 370 points. The S&P 500 down 42. The NASDAQ down 162 points. The Russell 2000 down 20. It is bad across the board. 10-year Treasury yield up about 1.5 basis points, 3.22%. Volatility, watching this closely. As we discussed recently, high volatility tends to mark very significant bottoms. But the question is, where does the volatility index top out? We are setting a new high today, which means we got to keep a very close eye on volatility. Technology weak again. We had a little bit of a bounce yesterday, but the weakness that we've seen throughout much of October continues. The XLK down 2.77%. Industrials joining in after a pretty rough day yesterday. You can see additional weakness today. It's accelerating. XLI down 2.3%. Energy, the leader. I did write about this in my blog this morning, though. It did have a false breakout above 78 where it had tested a previous high. Could not get that close above 78, and we have seen some weakness in energy today as a result. To the upside, we got utilities up barely, but still up nonetheless. Staples also up just a bit. These are two defensive groups that do tend to see money rotate to them as the market sells off. That's exactly what we're seeing today. And then the worst performer in the Dow, Nike. Nike taking out some important support today. Lest we get a big reversal, this is a somewhat important breakdown I see here on Nike, down 4%. All right, Erin, I'm getting tired of this week. I don't even want to do the updates anymore.
I know it's been a rough one for sure. That's why I've been watching those sectors and seeing this, like you were showing, utilities and staples and energy doing well. It's, on my graphic, my little circle, that's generally just it portends things that aren't good. So I have to say, though, I like you, I've been stopped out a few times. Just a few, right?
Yeah, I wish I could say I've been stopped out a few times. I've been stopped out probably a few dozen times, it seems like, here over the last 4 or 5 weeks. But anyhow, life goes on, the market goes on. We've got Arthur Hill in the house today. Art, how are you doing?
Doing good, Tom and Erin. Thanks for having me on. Always great to be here.
You sure you want to be here today?
Yeah, it's kind of like a marriage, good times and bad. You just got to get through it. So, we had a really good run, and I think it's a normal correction so far. I haven't seen enough evidence, but I'll get into that a little later in detail.
Yeah, we'll definitely be looking forward to that. Arthur's going to be back with us in about 15 minutes. Looking forward to it, Art, but we'll be back to you. Yeah, packed show, Erin, so I guess we probably should get rolling.
Yes, let's get that excitement going again. Here we go. It's going to be a great week. Tomorrow we have Bill Shelby coming in. What's hot, what's not with Mary Ellen McGonigal on Friday. I have a workshop on Tuesday. I think I'm going to do it on my favorite market indicators. And then Martin Pring, is going to join us on Wednesday of next week. So mark your calendars for that one. Today's schedule, let's look at what we got going. Arthur Hill, who we just introduced, will be here for our first segment. And 10 and 10, the first symbol will be Travelers Companies. And finally, we're going to finish up the program today with Under the Radar. Should be interesting to see what is lurking in the shadows that should be hopefully ready to go and make a move after this is all over. So let's get started. Technical news. Hopefully you've got some good news in there somewhere.
Well, first we'll start off with the key economic reports. We do have the September PPI, which came in this morning with a rise of 0.2%, and that's exactly what the market was expecting. And then we had the core PPI come in, also matching expectations, 0.2% versus that expected 0.2%. So really nothing unexpected there. At 10 a.m. this morning, we had August wholesale inventories come in, and they rose 1%, was a little bit hotter than expected, a little higher than expected, I should say. We were expecting a rise of 0.8%. So all in all, I think, I don't really look at the wholesale inventories making a big difference there. PPI, core PPI came in about as expected. I know everyone's trying to keep a close eye on inflation with the economy picking up and rates already going higher. The last thing I think that many of the market bulls want to see is inflation taking off. And that was certainly not, there was no evidence of that in the report this morning. Taking a look at the 10-year Treasury yield, though, we do see that it is continuing to rise. It has continued to rise. It is in what I consider to be a solid uptrend. Spoke about this a little bit yesterday, but the fact that we did fail at that 3.11% area, pull back, hold that rising 20-day moving average, and then break out again, I think is a sign of an uptrend in play here. And so those who are upset about higher interest rates are probably going to continue to be upset about it, because I don't think that rates are coming back down anytime soon. I think from a technical perspective, a move back down to test this 311 area where we got the double top breakout, which was a 7-year high. We are now in 7-year high territory. I think going back to test that level would not be out of the ordinary at all. But beyond that, I'd be surprised to see in the near term the 10-year Treasury yield fall back. So for those hoping that rates will pull back to maybe put a bottom in the market, I don't think that's going to happen. But again, that's just my opinion based on my review of the charts. Let's take a look at a couple areas within the market. And the first thing I wanted to point out, and this is not, I'm not saying that we're going to see a market bottom, because I think we have to see how things play out. But at least across the major indices, as we've moved to lower lows, this is an hourly chart that goes back the last 2 months. As we put in the lows, you can see actually PPO is maybe just starting to turn lower than it did a couple of days ago on this low. But as we look at some of the other indices, it's not going to be quite as questionable. Dow, yeah, that one does look like it's starting to weaken even further. But I know on the NASDAQ and the Russell 2000, we did have pretty solid positive divergences in play if we can get a reversing candle of some sort and start to see things turning around. We have to establish a bottom. The problem is, and that was the problem if we go back and look at the Dow, when we first broke down on the Dow, there was clearly a positive divergence in play, but you need a bottom. And when we continue to move lower and lower on the Dow, the PPO continues moving lower with it, and it eliminates that positive divergence. So we've seen that on the Dow. We've seen it on the S&P 500. We haven't yet seen it on the NASDAQ, though. We do have lower lows in play with a higher PPO, and I believe Russell 2000 may be even better. Yeah, the Russell 2000, I think, looks the best of all of them, but still, we do need a bottom going in, and we have talked a lot about the volatility index. So let's pull up the VIX, and you can see it is up near 19 today. And as we look back on the 6-month chart, we have not seen on the recent highs in the VIX, every time we've seen spikes over the past 6 months, they've topped out at about 18 on a closing basis, and intraday, it's been between 18 and 20. You've seen a couple of these tails go up to 20. Today's high was 1937. This is pretty significant. I'm going to stretch this chart out a little bit, but if we go and take a look at a 1-year chart and add the S&P 500 in here, the reason that I like to follow the VIX is that when it does finally top, it tends to establish a very significant support level on the major indices. So I'm going to go ahead, since the VIX relates mostly to the S&P. Let's pull up the S&P here at the bottom. You can see here the bottoms, the major bottoms in the S&P 500 occur with these spikes in the VIX. So here was one in late April. We got up near 20, and you can see the bottom here. Back in early May, we got up to 18, 19, and you can see the bottom. In late May, we get up to about 18 or 19, and there's your bottom. Same thing in June. We had multiple days up here around 18, 19, and you can see that bottom that went in. We had a little bit less of a spike, but still we had a spike in August where we got up to about 17. You can see that coincides perfectly with that bottom. And then we got up to about 16 in early September, which coincides with this bottom. So as we move down, and you can see we've had some breakdowns where we failed to hold prior breakout levels. That seems to be what's going on here. Anytime the VIX is on the rise, it scares me, because the VIX could go from 20 to 25. There's no guarantee that it does stop here at 20. I need to see a reversal in the market, and I need to see that long tail to the upside in the VIX. And right now, we do not have that. So I'd like to say that this is the bottom on the S&P, but let's see how the market goes. One thing that I do know from following the market is that when the VIX is on the rise, the market sells off very quickly. It can sell off much faster than you think. And a lot of the prior support levels that had held no longer hold. So you might just look at it and say technical analysis doesn't work. I would just simply say technical analysis doesn't work when the volatility index is skyrocketing. There's panic selling, and as a result, prior support levels, moving averages, trend lines, all of those things tend to take a back seat to the panic that is in the market. So right now we are in one of those periods. I can't tell you how far the VIX goes higher. I can't tell you how much further the S&P goes lower, but I can tell you when we top on the VIX, very good chance that we're bottoming on the S&P 500. So let's continue to watch that. A couple of stocks in the news today. So let's pull up a couple of charts. International Paper. They increased their dividend from $1.90 to $2, so 5.3% increase in their dividend. And they also announced a $2 billion share repurchase program. Apparently, they had one that was in place. They still had a remaining $430 million on it. They added another $2 billion to it. Just to give you some perspective, IP has an $18 billion market cap, or at least they did earlier today. And so when you're talking about a $2 billion share repurchase program, you're talking about them buying back more than 10% of their stock. And this is on the heels of their last buyback. So I would just simply say that even though the stock is getting hit very hard, management is standing behind their price. And if we go back and we look at a long-term 15-year monthly chart, we've seen pullbacks like this before on IP, and it's represented some buying opportunities. I'm not trying to call a bottom here on International Paper, but I do think it's important that management is stepping up and that they are increasing the level of their buyback as their stock price declines. Last one I want to talk about is Fastenal, FAST. They reported revenue, well, they reported results this morning. Revenues, $1.28 billion versus $1.27 expected. Earnings per share, 69 cents versus 67 cents. And in this market environment, that gets you a drop of almost 6% in stock price. We are back down testing a key gap support level that we saw back in July when the stock had gapped up with earnings. So we'll see whether or not that holds. A number of upgrades, downgrades out there. Erin, what do you have for everyone?
All right, let's take a peek. Lots of downgrades, actually, more so than upgrades today. And here's what we're going to take a look at. I'm going to go ahead and start with our upgrades. So Discovery was upgraded by Credit Suisse from a neutral to an outperform. I don't like it. It was upgraded, but as far as my investing and analysis goes, I have a PMO sell signal here. It's holding right now above this short-term support level. But, you know, if you want to get in on this, fine. But if we're already seeing a PMO turning over like this, and we really haven't seen that much deterioration in price, that to me is a warning sign, even though we're up 1.5% right now on the upgrade. All right, McDonald's Corp. What we have here is a nice little breakout on the upgrade. Guggenheim upgraded McDonald's from a neutral to a buy. I think this one's looking quite good. We have a PMO rising. Obviously, you see the OBV and Scooter are following suit. We have a breakout today. We're trading under this area of resistance right now. But we've gotten the intraday high did pop up above there. So if we can close above this level today, I think that's going to be, you know, especially good news for McDonald's. But overall, I think the chart looks pretty good. And if we move it real quickly to the weekly version, you can see this breakout coming in right here. And overhead resistance now is at 175. So that would be a great move. Look at this PMO buy signal on the weekly chart as well. All right, let's look at some downgrades. Deutsche Bank downgraded Church & Dwight from a neutral to a sell. I have to say pretty much all of these downgrades are not bottom feeding opportunities, I don't think, at this point. I decided on CHD to mark all of these different support levels because I suspect we're going to see price fall to the $53 level as the next level. Watch to see if we get the breakdown here. But I suspect, given this PMO sell signal, and we're now seeing readings below the last bottom on the PMO, I would be looking for a continuation of this breakdown on the downgrade. Clorox downgraded today by Deutsche Bank from a neutral to a sell. And as you can see, we've now dropped below what I would consider pretty important support here at that December high, the top here in August. And you can see what this level also was support in the short term for September. And now we are breaking down below it. We did trade below that 50-day EMA before, and it was a bit of a fake out. And it moved back up to that breakout point again. But now we're coming back down. We're penetrating that 50-day EMA for a second time. PMO is still in decline. Now, I think that if you could get this area of support to hold at about 142, 143, we might see a bounce coming off of that. But watch the PMO. If it's still falling like it is, not the best time to get in. But with a strong scooter like this, I think that there is some potential here for Clorox. Kimberly-Clark. This one was downgraded from a neutral to a sell. It also has been downgraded really in the last week on the 2nd and on the 8th. Both had two other downgrades to a neutral. But now we're seeing a neutral to a sell today on, like I said, from Deutsche Bank on Kimberly-Clark. We have the PMO though. It's slowing. It's actually trying to make its way back up. And look at the scooter. The scooter has moved very rapidly up. It's not into that hot zone, but it's getting really close. We're holding this area of support barely. You could see that we have closed above it. That's why I marked it right there. You can see that close right at 112 here last week. And, you know, we're trading above right now. Price is above. And, you know, I think this one could be a good setup. And, you know, let's see where we fall here. And somebody had asked if we could add the full quote all the time. I think we should. You know, Kimberly-Clark is in that consumer staples area. And when people get nervous, that's where they're going to go. So even though this one was downgraded 3 times, I have to say it actually looks better than most of the other downgrades out there. But it does give me pause. What is it that those guys know that they've moved, they've downgraded it now 3 times in the last week and a half? Because it doesn't look that bad. Pioneer Natural Resources, PXD, also downgraded today from a buy to a neutral. They moved their price target down from 230 to 210, which gives you a move up to, you know, to test that overhead resistance, if indeed that's, you know, what they're thinking. Of course, you know, you move from a buy to a neutral. It's kind of interesting on the downgrade. Yes, you downgraded your target, but it's still up there. I've watched this area right now for support. You have declining tops line coming through here. You have the support level here of the short-term tops here back in August and September. Look at all of the touches on this area of support right now. So watch that, and with that declining tops trend line too, I consider that giving you a little bit of support. PMO rising, 20 has just crossed above the 50-day EMA. For a downgrade, I think this one looks pretty good as well. And finally, VIP Shop Holdings, VIPS. Ugly chart. We now have a PMO sell signal below the 0 line. We don't even have a support level to mark on the daily chart. So I'm going to move us over into the weekly chart, which I have actually already taken a peek at. And not good news here either. You've got the OBV has been in decline the whole time. PMO is now reading at the lowest we've seen. Which I guess you could say, well, that makes it oversold. Well, I guess, but you know, we lost that $8 level here, the 2017 lows. That's a big problem here. And where's the next level? I would say $4, but even that, you know, this one could go back down quite a ways. I could see all the way down to this level even into, you know, the $1 range. So maybe VIPS is an opportunity for a short. I don't like the chart. I don't think it's getting any better. All right, that's all I had for upgrades, downgrades. Let's go ahead and bring Arthur Hill back in. Great to have you on the program. Always good to see you. And I know our viewers absolutely adore you. So can't wait to see what you have in mind to show us, especially with the market, you know, having such a difficult week, I'd say.
Yeah, it's a difficult 2 weeks, isn't it?
Yes.
And as we were talking before the show in the green room, in the bull market, you know, that's when we need to fatten up and make our profits, and kind of like a bear going before hibernation. You know, you need to get enough profits in so when you do get these drawdowns, you can withstand them. But personally, I don't think we're in a bear market just yet. And to kind of illustrate that, I want to just show you some perspective here by looking at some weekly charts. And we'll start with the S&P 500 SPDR, which is kind of like my benchmark for the market. All right, if I had to pick one index to be on a desert island to say, is the market bullish or bearish, it would be the S&P 500 or SPY. And if I had to pick one moving average pair, it would be the 50-day or 200-day. Could be EMA or SMA, doesn't matter that much. And then this weekly chart, I'm using 10-week and 40-week. And, you know, it's going to be a little bit late to the party on the bull market when it turns up, and it's going to get out a little bit late when the market turns down. But, you know, we want to catch the bulk of the move. And if you look at the S&P 500 SPDR, you know, it was a straight shot up from the beginning of 2016 all the way there to the beginning of 2018. And then we had a nice choppy correction and then the breakout. And from the 2018 low to the high, it's about 18%. So, I mean, that's a big move. And so the market is entitled to a pullback at this stage of some sort. And so if you look at the 2 weeks that we've had down so far, for SPY, it's barely registering. Now we'll get to QQQ and mid caps and small caps a little bit later, but, you know, conceivably, we could correct down to, you know, kind of 280s, maybe the first level to watch, but, you know, we could pull back to this congestion zone and retrace around 50% of that advance. And that would still be within the framework of 2 steps forward and 1 step backward. So that's kind of the position I'm working from, that this is a correction within a bigger bull market. Now we look at QQQ, we can see it has also gotten hit harder, I think. You know, it's had that big bearish engulfing week the previous week and then fell this week. But, you know, maybe this resistance zone and this reversal here and the 38%, you know, it's already near a potential support level to watch. And then you can see I've got 5-week RSI down at the bottom, and it's at its lowest level since October 2016. That's how strong QQQ has been during this advance. But again, I still think this is a pullback because, you know, we had 52-week highs not too long ago. And then we look at mid caps. Now, mid caps and small caps have bore the brunt of selling pressure over the last few weeks, because you can see they topped out 4 weeks ago and moved pretty sharply lower. And they're already in that 38 to 50% zone for the retracement. So, you know, maybe back to this breakout zone around 50%. And you can see mid caps are already oversold because 5-period RSI has moved below 30. And then you can see previous moves when RSI moved back above 30. And there's not that many on this chart, but it coincided with a nice low in the MDY. So now that we're oversold, that's what I would start to be looking for, some firmness and some sort of a reversal. And the reason I say that is we all have to make an assumption at some point. All right. And I am assuming that we're still in a bull market. My breadth indicators have yet to turn. I showed those on Monday. The 50-day EMA is above the 200-day EMA for the S&P 500 and SPY. So I'm still playing by bull market rules. Erin talks about bull market and bear market rules. Well, those are kind of my bull market rules. I'm still playing by those rules. And so that tells me if we get a decline, until it, breaks a certain level, it's a pullback. But the problem is, you never know how long these declines are going to go in time or in how far down they're going to go. I mean, if anybody did, we probably wouldn't be here right now. We'd be somewhere else where it is sunnier and warmer and on a beach. But here's IJR. It hit a 52-week high. And so that tells me the long-term trend is up. And it did peak in late August ahead of the others. And it's already retraced a little over 38%. So, it could come back to this breakout zone, to that 50 to 62% retracement area, and still be a normal pullback within a bigger uptrend. All right. And we can see that RSI is oversold, the most oversold since it was in the summer of 2017. It was very oversold in the fall of 2016. So look at that decline there in the fall of 2016. It was pretty steep at the time, and it was like a support break maybe, but then we rallied. And we had another 4-week decline here. And then, of course, that decline at the beginning of the year this year. So the bottom line is, I do think it's a pullback within a bigger uptrend. Now, a couple things to highlight here. Finance. And yeah, I think it's kind of dangerous to talk about the finance sector because a couple of big banks are going to report in the next few days, namely JP Morgan and Bank of America. And if you look over here at the top holdings, Berkshire is the top holding, 13%. And they're not a bank, and they're really not an insurance company. I know they do a lot of insurance, but they also buy businesses and let the businesses run themselves, so to speak, and reap the profits like Dairy Queen and such. JP Morgan, 11.5%, Bank of America, 8.37%. Those three account for around a third of XLF. So those are the three to watch. And JP Morgan and Bank of America report in the next few days. But if you look at this chart, you had this big move up to a new high. And then we had the wedge correction, and we're trying to break out. Now, we had this big decline 3 weeks ago, but we're back at the breakout zone, and there's a huge battle raging in this 28 area. And if we move below 27.5, 27.40, close below last week's low, then okay, the breakout has failed. But right now, I think the cup is still half full for the finance sector, and I would watch for another upturn. And again, Q off of JP Morgan and Bank of America. Berkshire is trading at a 52-week high. It already hit a 52-week high this month, so it's leading. And JP Morgan's not that far from a 52-week high. So energy, Tom has referenced energy a lot lately, and that's because it is showing some relative strength and a bullish action on the price chart. And again, you got this big move up to a new high. So that tells you the bigger trend is up. So we make that assumption. And then you can see that this is a pullback. Went a little longer than I expected. Actually, I thought we were going to get a breakout here, but we didn't. But it was still a correction within a bigger uptrend. And now we've got a breakout. We're down today, but I think this sector is breaking out, and I would think I'm betting on it to lead in the next few months. So moving down to semiconductors. Now I'm going to open up this chart to show you a little feature we have here called Inspect. And it's real easy to quickly measure the percentage moves that we're getting. And what I want to illustrate is we've got a pretty big move here. If you go from the high to the low and you follow those blue lines all the way over to the left, you can see we're down around 13.5%. And that's a big decline. But then you go back on the chart And you can see, well, earlier this year, we had a 13% decline roughly. And actually, we had two 13% declines. This one was 15%. And then you go back to 2017, we had a couple more, a 10% decline. And then back in the early part of 2017, we had about a 7% decline. But especially since October, it's been very choppy. So this action, yeah, it's negative, but if you see the 10 week is above the 40 week, because that PPO is positive. So it's just a choppy uptrend, and we're coming into what could be a support zone to watch here. All right. But this chop and these deep pullbacks have been happening for two times before. So this is the third one. So it's not that abnormal. We're just living in choppy times. So here's the biotech ETF. And, it's still in a long-term uptrend. This is a 52-week high and a long pullback and then another 52-week high. And okay, we got a big bearish engulfing and follow through. Okay, that's short-term negative, but does it derail the longer-term uptrend? Well, if you look at some of the pullbacks we've had in the past, this was about 15%. This one was about 13%. This one here was 12%. And this one here was 9%. So, this one could pull back anywhere from 10 to 13%. If we pull back, say, 10%, that takes us to around 110. You might watch for RSI to move below 30 down at the bottom there for a potential oversold setup. And I'm going to get into those here in a minute when I talk about the chandelier. And just one more chart I want to show you. Well, I'll just go through these for you since Tom, I think, gave me till 12:45. He gave me a little extra time. So I featured gold yesterday in On Trend, which is the weekly show that I do here. And it has a Bollinger Band squeeze working. And this is the fourth squeeze in the past 12 months. So the squeeze happens when the Bollinger Bands narrow. And November 2017, we had a narrow. And you can measure the width of the Bollinger Bands using the bandwidth indicator. And you can see it move below 2% there. All right, so the squeeze was on. And this indicator here is %B. And it tells you the relationship of the close relative to the bands. So when it moves above 1, as it did here, that means you've broken above the upper band. All right, when it moves below 0, that means you've moved below the lower band, as you did up here. But what I want to illustrate here is, the Bollinger Band squeeze is a popular setup and trading strategy, but it's prone to whipsaws because you can see we got the head fake, and John Bollinger talks about these in his book. So it looks like we're getting the breakout and then boom, we get hit. But the breakdown doesn't work either and we move higher. So we got another squeeze and an upside breakout, and it worked for a little while, but then we broke down. And then we got another squeeze here in June, and this one was a dandy. So you had two signals that didn't work, but this one maybe paid for both of them because you moved from like 122 to 112. And now we've got another squeeze working. And technically we've broken below the lower band. So we've gotten another sell signal for gold. All right, but we're in a uncertain period right now, maybe uncertainties above average. It's certainly higher than it was in June and July when the trends were more stable and technology was leading and consumer discretionary was leading. So if you get a breakout here at 115, that would be the level to watch for gold. All right, but right now it's clearly bearish and it's got a short-term bearish signal working.
Hey, Arthur.
Yeah.
A question for you on that GLD chart there. When I look back at the two head fakes that you have in blue at the top, both in November 2017 and then, right there, March of 2018, neither one of those took out the prior price high. So is there, I know, you follow price resistance and support very closely. So when you see a move through a Bollinger Band like that, but it doesn't clear price resistance, wouldn't it give you like reason for pause? Because I see like on the last one down here at the very bottom where you're, showing the squeezing currently, you've got that line drawn across there of your price resistance. And it seems to me like it makes more sense if it not only takes out the Bollinger Band to the top, but then also takes out your price resistance. Does that matter to you?
Well, I can see how that would be important because you're right. Here it didn't take out the price high, and here's the high, and we didn't take it out. Of course, the more you wait, the worse your risk to reward gets.
Right.
But I think as far as the Bollinger system, he just uses the Bollinger Bands. Of course, it's his indicator, so he only wants to use what he's got.
Right.
But it depends on how close resistance is to the band, I guess.
Okay.
Is what I would say. But it's hard to program in, like if you're going to back test this, you couldn't program in resistance. That would be hard to do.
Right.
So most back testing would just involve the Bollinger Band break. But you can see here, definitely, you broke a support level as well as the band. And that signal worked out a lot better. So here, if you break the band and you break resistance, I think that would be a confirming signal.
Gotcha. Thank you.
All right. So this is just a quick one on natural gas. This is the natural gas November 2018 futures that we have at StockCharts. If you just search for the caret symbol there at the top left, you'll get all the futures that we cover. No trade here, but man, look at that breakout. Natural gas is broken out of a long trading range. So this is something to keep on your radar for the future, and that could support, what we've seen in the energy complex. I'm also liking biotech still. I mean, look at Jazz. It's down just a little bit today. I view this as a pullback within an uptrend, and a breakout there at 170 would be bullish. And then another one would be Heliad. It's down a little bit today, but its breakout is still holding. So those are some to, I think they're less correlated to the broader market, to technology, than say some other groups like, well, software, of course, is correlated to technology. It is technology. So now I want to talk about the chandelier exit, because I've got this strategy that uses SPY, MDY, QQQ, and IJR to trade mean reversion bounces. And basically, when the trend is up and you're in a bull market, when RSI goes below 30, and I'm at the bottom left of the chart, and then it moves above 30, you get a bullish signal. All right, and you take that signal until it closes below the chandelier exit. So I've got the bullish signals in green, the dashed lines, and then the exit signals, the entry signals in green, the exit signals in red. Now you see that you get the buy signal while you're still below the chandelier exit. And so price has to rise or the chandelier exit has to decline. They have to meet at some point in order for you to get an exit setup. And then the setup triggers when you close below the chandelier. So, there have been some good trades. But of course, if you look at the most recent trade in mid-September, we had RSI moving above 30. And we didn't get above the chandelier. And instead, we moved down. All right, so this is turning out to be a bad trade. And it's going to happen. All right, but I want to explain how the chandelier works, because if you're going to use an indicator, I think it's imperative that you know exactly how it works. And you can go to the chart school and you can read all about the chandelier exit. You can look at the formula. You can plot the components of the chandelier exit, which I'm going to do here. And you can go back and study it, all right, with how does it react, all right, to the different changes in price. So the chandelier is made up of a couple things. First, you have the 22-day high. And what I've got here is the 22-day price channel indicator. And so every time we make a 22-day high, it goes up. And so the 22-day high was flat for 22 days. And then you can see as the 22-day high starts falling at this point here, all right, the chandelier is going to start falling because the chandelier is the 22-day high. And then you subtract one 22-period ATR value from that chandelier exit. So you've got the 22-day high minus one ATR value, and there's your chandelier exit. So at some point, if prices keep falling, that chandelier exit is going to fall. And if volatility increases, that means the ATR is going to go up. So the distance below the 22-day high is going to grow. So at some point, the chandelier is going to come down, and okay, maybe we won't ever get a bounce, but at some point, we're going to cross above the chandelier exit, and there will be an exit signal set up. Now, on this next chart, I'll show you that it can be quite hairy to sit through some of these, because here's QQQ when we had that volatility at the beginning of the year. So you can see we got a bullish signal from RSI in March around the 20th, but continued lower. And so the chandelier finally came down and price finally went up, and we got the cross. And that was a losing trade. All right. But the others have worked out all right. The last one was in September, and you got out with that close below the chandelier last week or the week before. Last week, I think. And now we're oversold again. So if we move above 30 in RSI, it'll be another mean reversion setup. Now, this system doesn't trade all the time. I think it's only active 45% of the time. It can also be used on the leveraged ETF equivalents like QLD and SSO, or I think UWM is the equivalent for the Russell 2000 small cap. But, you know, when you look at these systems, and when I tested these systems, I didn't test it over 5 or 6 trades. You know, I tested it over more than 10 years and looking at a couple hundred trades to see how it would work. And sure, you're going to get losing trades and you're going to have a losing streak. But over time, it's shown the ability to work. Now, I'm using 5-period RSI for the major index ETFs like QQQ and SPY because they're very broad, all right, especially SPY and MDY and IJR. So they're going to be a little bit less volatile. So 5-period RSI is a little bit more sensitive. It's going to move below 30 a little easier. All right, if I use 10-period RSI for SPY, it's not going to move below 30 as often. So when it comes to the industry group ETFs that I track and stocks, I tend to use 10-period RSI because those are a little bit more volatile than a broad index. Here's software. All right, it's been one of the strongest. Look at this advance. All right, we had a couple of sharp declines along the way, and we got RSI right to 30. I don't think it went below there, and right to 30 in December, and below 30 in March, and below 30 in June, and well below 30 now. So we've really gotten hit hard, and we're oversold. And so I'm looking for that move above 30 to trigger a mean reversion signal. And yeah, it's catching a falling knife. And I did a presentation, and it's called "Would You Have the Nerve?" Because it takes a lot of nerve to catch, you know, stick your hand out to try and catch that knife. Now that's why I don't, you know, buy when RSI goes below 30. I wait for it at least to bounce and move above 30. All right. The only thing I would be concerned about now is you've got a lot of pain out there. And as Tom was mentioning, you know, the market needs to find its footing. You know, it's kind of like the prize fighter gets hit with a left hook and is dazed and stumbles. Well, it takes a little while to regain your footing and stand up. And it looks like they're throwing out the baby with the bathwater today. So it may take a little while for the market to find its footing. But another one that I'm highlighting, And the reason I'm highlighting software and medical devices is they hit 52-week highs recently. So they're coming off of 52-week highs, coming off very sharply. All right. But they were the leaders in September. All right. And so IHI is coming into, what could be a support zone in that 210 area. And RSI is below 30 for the first time since February. And look at that decline in February. All right. That would have been just as difficult, to time that bounce there. All right. So do we have any questions rolling in, Tom?
Well, I've got one for you.
Yeah.
And that question is, I know that the strategy is part of an uptrending ETF, but I guess my question is this: at what point, or what's your determination on what qualifies an ETF as one that's in an uptrend? So for instance, I mean, obviously the XLE has turned, but prior to this recent move to the upside, XLE was pretty, it was back and forth. There was a lot of volatility in each direction. I wouldn't necessarily say it was in a longer term uptrend like we've seen with software. And so I guess my question is, at what point do you look at an ETF and say, okay, this is in an uptrend. This is one of the areas of the market that I want to consider if I get this RSI to drop down below that 30 level?
Well, it's a tough question to deal with, but yeah, thanks for giving me the tough ones, Tom. No, it's a very good question. And what it is remember, everything is relative. There are dozens of actively traded ETFs out there. The sector SPDRs, the major index ETFs, the industry group ETFs. And so, when I was looking at XLE here at this stage, well, in August, it wasn't one of the better looking charts out there. All right. There were better looking charts out there. And so if you're, ranking your ETFs, XLE wouldn't have been in the top group in August. There would have been other ones that would have been on the radar, and that would have been where to focus on, ones that had stronger charts. Now, I just pretty much use like a higher high, higher low type thing, and 50-day EMA and 200-day EMA to determine the long-term uptrend. And, we did have a higher high here. And as I said, this correction went a lot longer than I thought. And, I was ready to throw in the towel there in August, and I did. And so I missed this great bottom here. XLE just pushed me just enough to get me like I'm fed up. And sure enough, once you're fed up, you get that nice bottom and that breakout. And it's hard to stick with these systems sometimes.
Yeah, I would agree, though. I mean, looking at that XLE off that top, it looks to me like you had those rising bottoms and the falling tops, almost like a symmetrical triangle. And that big move down did look like it was a pretty significant breakdown, though. I mean, I could definitely see where you would come up with that, conclusion and want to avoid it.
I hear you. Yeah. So thanks for sticking with me on that.
I'll follow you right off a cliff, Arthur.
Yeah, thank you. As long as we have a cooler full of beer.
Exactly. I know we've got a poll, and I wanted to pull this up because I think this is a pretty interesting poll, given everything we've gone through the last 1 or 2 weeks. Looking at the different asset classes and considering the fourth quarter. I mean, fourth quarter typically is pretty bullish for equities. But when you're sitting in the middle of what we've been sitting in the middle of for the past week or two, it's hard to pull that button, although it looks like most of our listeners are going to pull that spider button and say that the spider is the way to go over the next 3 months. How would you answer it, Arthur?
Well, that was my answer. Because of what you said, I think equities do tend to perform well in the fourth quarter. And I think it's a pullback within a bigger uptrend. So my bet would be on SPY or U.S. stocks, basically.
All right, I'm going to
but it's interesting. A lot of people pick the dollar as well.
Yeah, I'm going to bring Erin in here in just a second, but I did want there was one question that was in the room. I know someone was asking specifically about gold. And are you seeing anything yet that would suggest? I know there was a level I think that you wanted to clear on gold, but anything specific at this point that would get you into gold, or do you need to see those recent highs cleared?
GLD needs to break above that 115 level.
Okay. Yeah.
That would be a bullish signal for gold because it's clearly in a downtrend. I mean, if you're a real player, go in now and put a stop, just below the September, October lows.
Mm-hmm.
But I'm not a bottom picker, so.
All right. Well, let's bring Erin back in. Erin, do you have a selection here?
I did go with the SPY.
Okay.
Because I agree, I think that that's the one place that, overall there are all different kind of, assets that are related to all different kinds of, different things in the SPY. So to me, I feel like it sort of incorporates a lot of, the different sectors, et cetera. Real estate, it's very interesting because running scans, I've been getting a lot of real estate area stocks, but I'm not convinced. So I think the dollar will be going higher. I'm just not so certain about, and I think gold is going to be suffering from that. I think it should be doing better this month, gold, but it just isn't,
Yeah, I would, I didn't select, but I would go with the UUP. I would go with the dollar.
Okay, you're going to go with the dollar. So you're going for the flight to safety.
Well, I think I'm just going, everything I'm seeing on the charts, and I've been talking about this for, a while on Market Watchers Live, but the fact that the U.S. Treasury yields are going up so much faster than what we're seeing around the globe, and I like to compare versus Germany, but I guess you could pick whatever foreign market you're interested in. I'm seeing the U.S. Treasury yields rising faster, and there's a really strong correlation when U.S. Treasury yields are rising faster than other parts of the world. That correlation with the dollar is pretty strong. They tend to move in the same direction. So I know right now the U.S. Treasury yields relative to Germany are setting new highs. The UUP tends to follow that and struggled for a little while, but is just starting to pick back up again. I think the dollar goes higher. And I think the higher dollar actually is going to result eventually, being proven wrong right now, but hopefully I'll be proven right in the end. But I think the dollar rise into the fourth quarter and into 2019 is going to cut into the earnings of the S&P 500. So I actually like this. I still like the small caps better, but I really would like to see them begin to outperform. Normally they will when the dollar is rising. Not that they both can't make money, companies in both indices. It's just that there is a little bit of a headwind for the S&P, as you know, when the dollar is rising, as many of those companies have to translate foreign earnings.
And you mentioned Germany, and the euro is like what, 57% of the dollar index. So
yes,
if U.S. yields relative to German yields are going up substantially, then that would definitely favor the dollar over the euro.
Yeah, so that's my reasoning. I still think the market goes higher. I was listening to you pretty intently earlier saying that you believe that at this point that this is nothing more than a correction. I agree with you. I don't really see the evidence that this is anything more than just a pullback that we get from time to time, a little shakeout, and I expect the market to go higher. So I don't know on a percentage basis whether the dollar goes up faster than the S&P or not, but I do think the dollar goes up. I feel more comfortable with the dollar going higher, I think, into year end.
Well, it's definitely in an uptrend.
Mm-hmm. Yeah, I don't see a bear market. That's at this point. This really has a lot of the earmarks of what we saw on, some of the previous pullbacks with, a lot of those defensive sectors starting to improve, during the turnover as we've sort of turned over here into a correction or a corrective mode. So.
Yeah, and the fear really drives these bottoms, and we are definitely picking up in terms of panic right now with the volatility index jumping. So I think in the short term, the very short term, I think you have to be really careful here because we could get 1 or 2 more days of this selling and things could really pick up on the S&P the downside. But also be looking for a reversal. I don't like trading when the VIX is up this high. A lot of people really like these big moves back and forth. They drive me crazy. I mean, I literally – one minute to the next, I can't decide if I want to buy or sell, which makes it really difficult.
Yeah, and the VIX is not even above 20 yet. So you're right; it could go higher quite easily.
Well, I think it'll tell, at least, my studies, if you get up to the 1820 area on the VIX, that coincides with a lot of these short-term pullbacks that we've seen. When you start getting up into the mid 20s, then you're starting to take a look at more intermediate term, more significant bottoms like we saw back in January, February, that period. And then, of course, you get up into the 40s, 45s, those, then we're starting to talk about historical levels on the VIX, which can be very significant and can indicate the start of a bear market. So I think where the VIX goes is going to be pretty important here.
Okay, I'll be watching that.
It's always a pleasure to have you on here, my friend. You share a lot of great information with us and a calming voice to a very difficult market that we're all facing right now. So it's always great to have you on here, Arthur.
Great to be here. Thanks for having me on, guys.
Always.
All right.
All right, have a good one.
All right, you too.
You as well. Okay, I guess it is time for the 10 and 10.
Yes.
I have been getting together all of the requests. Let's go ahead and we'll take a peek at those on the RRG. Well, clearly we have one outlier, an IGC. Probably look at that one. Here's the sector build up here as far as what's being requested. And, it's pretty much just all over the board. I guess financials and cyclicals do seem to be leading in the requests. Technology's way down though. We usually see far more. So let's go ahead and get started. TRV is the first symbol.
All right, I think TRV is beginning to look much better, at least in the short term. Now, I didn't pull up a long-term chart, but the long-term chart on Travelers is pretty nice. Intermediate term, not so much because we are way below what we saw back in February, late January, early February high. So we are still down 10% from that level while we've seen the markets break out. So from an intermediate term perspective, there's obviously been some underperformance. But with all the craziness that we've seen of late, you can see Travelers is actually holding up pretty well here. And so I think I'd watch the rising bottoms here, which come in at about 129 currently, the recent low 128. So I'd maybe watch that to the downside. To the upside, there's a gap resistance that we're still trying to get back up and fill around 136. So I think in the short term, I would just say Travelers in this 128 to 136 range. If I had to take a position, I'd probably be on the bullish side of this just because, again, I still believe we're in a bull market. So I would be looking for a bullish conclusion here to this pattern and eventually clearing that gap resistance level. So I'm okay with Travelers not jumping up and down, but I do think it does provide a little bit of safety with everything that's taking place in technology right now.
All right. Well, let's look at what's most popular in the chat room. And actually, what's most popular is somebody's comment that says, looking forward to Arthur, always a wave of reason in a sea of confusion. Actually, the most popular thing in the chat room. I thought that was interesting. Past that, let's go ahead and we'll do Amazon.
All right. Amazon getting caught up like everything else to the downside. Volume has picked up here a little bit. I'm looking for a couple support levels. So the first one we are getting closer and closer to, which was the high that was established back in June. We pulled back, we broke out. Notice we came down, we tested this area. It's around 1760, and we were able to bounce off it and move higher. So as we move back down, that would be the first level I'd be watching. Probably the next level is going to be the lows we saw in June, that latter part of June. So somewhere in this range, I think if the market is bottoming or getting close to a bottom, we're probably going to see the upper support level hold. I think if the market continues down, we see that VIX shooting up in the mid-20s. That's when you start to see more panic kick in, and I could see Amazon easily back down 1650. I don't think it goes down there, but again, market is not rational and the VIX goes higher. So I would just say one of these two levels is where I'd be looking for a reversal.
All right. And also popular in the chat room, and we haven't looked at it in a week, AMD.
All right, AMD. Among the semis, I still think it's one of the better ones. I think the fact that we finally gotten some relief. I mean, we had an RSI up near 90 for almost a month. Now we're back down close to the 40 level. And during an uptrend, that tends to be a pretty good area. I don't like today's candle, but again, you're talking about a market that isn't very rational. I can point out support levels, but when the market sells off, like in this kind of fashion with the heavy, really high VIX, that becomes a problem. Now, we are right in the middle of where I would expect to see a turn on AMD. But again, does the volatility take precedence here? Or is it, going to be price support? Is it going to hold price and gap support? PPO back at the center line. Again, like I said earlier, we got the RSI down 38, much more palatable. Only thing I would say is if I'm getting in here, I'm going to try to keep a fairly tight stop, and that could mean whipsaw in a volatile market, but I think you've got to keep your stops in play.
All right, well, let's look at that outlier. India Globalization Capital, IGC.
Well, I had a feeling we were going to be looking at something like this when I saw that on the RRG. I mean, this is a huge move. So on a relative basis, obviously, it's just completely swamping just about everything. Even though we have pulled back quite a bit, we are still, this was down to what, maybe a quarter, maybe a month, 2 months ago, and now we're up $5. So, you know, under a lot of the calculations on the RRG, you're going to see this thing sitting way over on the right-hand side of the chart. I think to the downside, it established a pretty important low after those 3 gap downs in the close just a few days ago. So I think that 4 area is going to be pretty important. But again, you're talking about a stock that within 45 days went from a quarter to $15. So trying to gauge the risk and manage your risk here is almost impossible. But I think the recent low around $4 is something I would watch closely.
Okay, let's see. Next one I'm going to give you is symbol EPR. It's in the real estate sector, Entertainment Prop Trust.
All right. Yeah, looking at a longer term chart, we had the negative divergence. Actually, it was negative divergence in here for a while, but it finally did sell off. Went down, tested this low, close to the breakout. I'm going to say right around 66 to 66.5 is pretty important support just looking at it. And so where I'm coming up with that, you can see the tops and the sideways consolidation here for a few weeks before we finally made this breakout. Check out the volume picking up on the breakout. And then on the recent lows, you can see that the lows have stopped right about 66.5. So I'm going to say this 66 to 66.5 area is your support. Resistance up near 70. We're near the upper end of that, so I wouldn't be putting on positions here. But I do like the uptrend followed by sideways consolidation. I think eventually we get the breakout, but I'd be most interested from a long perspective if we would pull back closer to that 66, 66.5 area.
All righty. The next one is Energy Fuels, 4 U's is the symbol.
Wow. 4
Yeah, new one. I haven't heard of this one.
I don't like today's candle at all. When I get up to resistance and I see a bearish engulfing candle at resistance, that bothers me. So we got right up to that August high. I think the chart looks pretty good here, actually. I'm not upset about the chart. I just, in the short term, having a reversal at resistance, I'd be looking maybe for recent lows, which could be as low as $3. I don't know if it goes all the way back down there, but at least down to the moving averages, which are around 320 to 330. Currently, the stock at 346. So I think you have a little bit more downside in the near term. Ultimately, though, this breakout, if we could get it, I mean, you could call this an uptrend, maybe a little bit of a cup. If we pull back, put in a handle, and then break out, we would actually measure up another 90 cents to about 450 on this one. So I like it. I just don't like it short term because of that reversing candle.
All right. Let's see. The next one we have is WSM. Waste Management, I believe. No, Williams-Sonoma.
Yeah, Williams-Sonoma has thrown me for a loop here a little bit. A lot of these stocks have. I'm telling you, when you get the VIX up like this, and this is one of the reasons why I've been stopped out so many times, I would have thought, okay, 62.5 or right around that area would be a great support level for Williams-Sonoma, but it's going down below it. And when you look, it's not even on heavy volume. It's not like there's a lot of distribution taking place. It's simply that there are no buyers when the volatility index climbs like this. Nobody wants to buy. Everyone's fearful, and it's only about selling. So I like the stock, but where it's going to bottom is anyone's guess at this point. I mean, it could go all the way back down to that August low around 56, 56.5 if the market stays weak. And below that, I'd really be concerned. Not that I'm not already concerned. I mean, this stock was doing very well at 74, and it's now lost close to 15%. And doing so on very, very light volume. I don't know what to make of it, to be honest. I like the stock, but I'd have to see a reversal before I jump in.
All right. Let's see. What do you think of Kellogg? K, is it great?
I'm going to say that it's probably greater than most, given that it is at least a consumer staple stock. So with a lot of the market technology selling off the last week, you can see this one has actually held its own pretty well. But it too is in a downtrend. I think the 68 level from on a closing perspective, I think that is going to be pretty important. You can see we've had a few tests around this level. You could almost see a left shoulder neckline, head, right side of the neckline now bounce maybe. So you want to be careful if this level gives way. I could make an argument for a head and shoulder top. It's not going to be one of my favorite areas because, again, I do think the stock market goes higher, and it is a staple stock, which is probably going to underperform. And it's currently not even trading very well with that PPO below the center line. So probably in order for me to take a more bullish stance on Kellogg, we first need to get back through that 20-day moving average. That's like the minimum first step. So until then, I would be really careful with it.
Okay. Let's see. The next one is going to be NVIDIA. We haven't looked at that one in a while.
Yeah, NVIDIA, it is breaking down, and unfortunately, it's in part of the market that is not doing well right now. It's the semiconductors. So it's getting back to what Arthur said earlier. It's the baby being thrown out with the bathwater. I think NVIDIA is a great company. I think there's multiple reports out there about why it's going to be a great company for a long time to come. But when the market sells off and gets irrational, this one sells off like many of the others. So I think that the key support area was up around 260. We had several tops right at about 260, went through, came back down. We've been holding that level. If somehow we could get a big reversal today and close back up through 260, I would love this chart. But if it breaks down and closes where it is now with volume starting to pick up, then I think you got to start looking at some other levels, which I think could be down closer to maybe 235 to 240.
Okay. Let's see. Very, very last one is XXII, 22nd century.
All right, XXII. Yeah, I like the breakout here. The heavy volume coming in to support it. I don't usually trade Amex stocks, but just looking at the chart, I really like what's going on. I mean, a lot of consolidation in the base here. You can see that the reaction high back in February got up to about 320. We opened above that today. So if we could close back at the high with the PPO strengthening and getting through major areas of resistance throughout 2018, I think this one could really go. You got the next major area of resistance all the way up at 420. So I think you can make an argument for a pretty solid reward, potential reward here. To the downside, if we do hold this breakout level, I think I would watch $3 to the downside. That was the breakout that we saw yesterday. And if you want to go a little bit, give it a little bit more room to the downside, maybe the rising 20-day, which should start to come up pretty rapidly now, but it is at 279.
All right. And that completes the 10 and 10. Here are the symbols that we just went over. You'll find these in the Market Watchers Live chart list, and that is located under the blog articles tab. Just click on the Market Watchers Live blog, and the link is right there at the top. All right, let's go ahead and do our final market update and see what's been going on in the markets so far today. All right, here we are. Okay, obviously we're continuing a slide that is very uncomfortable. Currently trading near lows. The Dow is now down over 418 points right now. S&P 500 down about 47 points, trading right near the intraday low for the day. NASDAQ looks like it may have found a little bit of support at 75.50. And the OEX is continuing to fall. It is also trading near intraday lows. S&P 400 and the Russell 2000 also seeing some difficult times here today, also in decline, but currently holding at intraday lows around 1595 for the Russell 2000. And we can see that Canadian markets falling on the open as well, but it looks like it's getting ready to turn back around, starting to consolidate and trend slightly upward. The TSX is currently down over 237 points. TNX Treasury yields up slightly, 3.218%. UUP continuing its slide lower, from yesterday's high. And then gold is now on the positive side. I would have liked to have seen it perform far better this morning. Notice it spent all its time in negative territory while the dollar has been doing the same. This is something that's definitely been concerning me about gold, and the fact that it is not performing like it needs to. And when you see this sort of a dichotomy where it's not following the reverse correlation between the two, that is worrisome to me. TLT, we can see a gap down, but now trading mostly sideways, down 44 cents to 113.36. And USO also in decline today, currently reading 1546. It is, looks like it is consolidating now. Maybe it's done for the day as far as downside movement. And then I wanted to show you the last chart is our short-term chart for decision point. We've been talking a lot about the VIX, so I wanted to look at it on my inverted scale. We are in very, very oversold territory as far as the VIX is concerned in the very, very short term. We have been, we have been below the lower Bollinger Band for 4 days. This isn't really a typical thing. You can see we had almost 4 times here back in the end of June, but I don't usually see this sort of trading, I suppose. I don't see readings this low below that lower Bollinger Band too often. So I did want to point that out. We'll be looking very closely at advances minus declines later today. If there's anything interesting, I will certainly be talking about it in the DP Alert blog. And that's all I have for our final market update. I'm going to pass back to you, Tom.
Okay, let's take a look. I just wanted to show you the sector leaderboard here. And this is just today, what's going on right now. And you can see that the utilities, the only group right now that is green. And you can see things really picking up amongst some of the aggressive areas of the market: technology, industrials, communication services, consumer discretionary or cyclicals. All of these areas getting hit pretty hard. Now, this is an intraday. This is just one day. But if I go back and I pull up a week, because some of this, most of this weakness has taken place just over the last 5 trading days. Take a look. Utilities have done well, real estate and consumer staples. So those are your 3 defensive groups that typically see money rotating in when you have a sell-off like we have in the market right now. But look at the disparity between the aggressive groups, where technology over the last week now has dropped 6% just in 1 week, and utilities, which have gained almost 4%. That's almost a 10% swing between the two. So there's a lot of money rotating right now, trying to avoid the carnage to the downside as the volatility index picks up. And then I just wanted to point out, within technology, every group has gone down. Apple has enabled computer hardware to hang in there the best, but even computer hardware down 4%. And then you've got areas that I've been following pretty closely: semiconductors and software, both down more than 7% over the last week. So this has been painful. I know Arthur alluded to that earlier, and it's very difficult to try to say where this stops, even if we're right. I know Arthur was still looking at this somewhat bullishly. He's not ready to throw in the towel in the bull market. I'm not either, but it's still difficult to say where the bottom might be. I would just say that as we move down, what you want to see, and we probably will see at some point, is capitulation, where the VIX hits a peak, the volume is astronomical, and we get a reversal. We get some kind of reversing candle, whether it's a bullish engulfing, maybe a hammer with a long tail to the downside, something where we see buyers coming back in. That's what I'd look for as we go throughout the rest of this week. So let's go into under the radar. I'm not sure even what the under the radar means at this point, Erin, with everything. There's nothing under the radar. Everything's getting hammered, but maybe we can.
I know this was really tough to find. I mean, seriously, I was working very hard to find candidates for this particular segment today, and it was just very difficult. I had to run a bunch of different scans, and I wasn't pleased with what I was getting. So I just, handpicked out of some of the scan results the ones that looked interesting to me. But let's go ahead. I'll share with you the ones that I did end up getting into. All right. So this is the group that I ended up picking. I will say I do own PEY, so I'm glad to see that it did come up on an under the radar scan of mine. I will be holding on to that. And somebody did mention RIG. I am still holding that. I'm going to watch very closely to see what happens on the close today for RIG, but I am still holding it. So just FYI. All right, so Cardtronic, CATM is the first one that I'm going to look at here. All right, and right now the PMO is flattening out. It was still rising, but you can see that's on that pullback that we had today. We went up to those intraday highs. We have logged just slightly higher intraday high, but this is really, I think, the interesting part of this one. We have a double bottom off of this lengthy decline. We executed it, and now we're falling back to the breakout point. That's okay. I actually like that. And that's why the PMO is flattening, because we do have a 2.84% move to the downside right now. But you can see a little bit of accumulation here in the last couple of days. Not the best, but I like the setup here mainly because of the chart pattern, and I think the PMO looks pretty good. You can also see that Scooter is in that hot zone, and volume is following, like I was saying, that move to the upside. Thought that one was good. Clearway Energy was the other one. And here we go. Nice, move on that PMO to move very deliberately to the upside. Look at the OBV and the Scooter on this one. I do like this a lot. We closed that gap back earlier in the month, and we're making our way up to test overhead resistance. Now, while it may look like we've had the run here, we've got the 520-day EMA positive crossover. I think this one will probably break out just based on the look of these indicators. I think it's looking pretty tasty right now. Energy is a good sector to be in. I'm going to move this to full quote just to make sure I am speaking correctly. Yes, see, this is utilities. So this is a great place to be right now. We have noticed a lot of money rotating in that direction, which also is why we're seeing that sort of rally going on. So I thought that one was interesting. The next one is ESV. And actually, I would say this one isn't really under the radar because I did report on this one yesterday as an upgrade. But I've been watching the chart because I really liked the setup that I saw on that upgrade. If it wasn't yesterday, it was the day before, with the breakout from this flag formation. And again, you've got the breakout, a move up, and it's come back down to test the breakout point. The PMO is still rising despite this pullback here to the breakout area that we saw earlier. I think this one could still run. I'm just a bit concerned that my PMO is on the overbought side with this one, but volume's looking good. I think we could still see some more upside movement off of this flag formation. This is the one, like I said, I still own. This is really in my long-term account. I've held this one for a very, very long time, at least a couple of years. So it's just one that I like. I have had pretty good luck with it. Obviously, it was very difficult decline and correction, but everybody had to sustain that. But we've had a really nice steady move to the upside. You can see the 20-day EMA, although it had been in decline, it is starting to turn back up. I see in this thumbnail a possible baby flag forming here. And, you've got a nice move on the PMO. Yes, that volume on yesterday's sellout is a little concerning, seeing that OBV turn down so quickly so far. But I still like this one. You've still got a Scooter on the upside. I would just watch closely, make sure that 20-day EMA holds if you're not in this already. But I like that one as a very long-term holding. It's done well for me. Store Capital Corp, and you can see another double bottom, confirmation line broken, coming back to that breakout point, and we got the PMO buy signal already. Nice Scooter move. You can see some accumulation going on here as far as volume. So I thought Store looked very good. And finally, Waste Management, WM. And this one, we do have that nice PMO turning up that I like those, like I said, clean crossovers. Clean crossovers tend to do the best. So when I see these moves and, you know, an undulating move to the upside and you get the buy signal, usually those turn out to be pretty, they turn out to be pretty darn good. And especially when you're going to see it above the zero line. If you've got PMOs above zero, that's telling you that it has internal and relative strength. All right, so those were the ones that I had picked out. It was difficult. It was very difficult. So I think right now, you know, we've been talking about the fact that we really do need, you know, these pullbacks are necessary. So.
Yeah, I I tried to take a little different approach here because you know the market is set up differently now than it was just a week ago. I mean, with all the huge selling, excuse me, and a lot of the aggressive areas of the market getting hit so hard, I do think that there are opportunities in some other areas, and so I wanted to point those out. Talked a little bit about energy recently and the exploration and production index. I think this is a bullish area of the market where we're seeing money rotate. My biggest concern was the XLE being right up against resistance, and we've since seen a pullback on the XLE. And so let me pull up first the chart on the DJUS OS just to show you what I'm looking at here. So the DJUS OS has consolidated for a while. We just got the breakout, and we are just now pulling back and getting our first 20-day test. So an area that seems like it probably has just a little bit of downside. I mean, if it breaks down below the 20-day, you're basically giving up your price support and the 20-day with a PPO that looked strong and a breakout that was on pretty good volume. That would not be a good sign. So I'd probably move right back to the sidelines. But I do think that there's some stocks in this group that are particularly interesting. And because I think the dollar goes higher, I'm focusing on the small cap stocks. So the stocks I'm about to go over, all of them are small caps. All of them are in the exploration area, and they all have scooter scores above 70. So they're going to be among the better ones. So let's go ahead and take a look at these stocks, and maybe there's something that might spark your interest. Maybe not. I don't own any of these, just for full disclosure. JAG, Jagged Peak Energy. I love the move here with the volume coming in. There is a triple top, maybe quadruple top here at about 1475 that we need to get through. So this one's just kind of sitting there waiting. I mean, we could call it a momentum sleeper. We could call it a, actually, I'm going to go back a little bit further here and just take a look and see if this is more of a longer term pattern. No, it wasn't. I was wondering if we had a big uptrend because obviously there was this kind of like head and shoulder pattern, but there's no uptrend, so I would not be playing it as any kind of a pattern. But still, this is a stock that I do think is in a great area. And if it can get through 1475 to 15 with some volume coming in, I would look for a run up to that 1650 area. Next up is Matador Resources, MTDR. Somewhat similar. Actually, I don't need the 2-year or 3-year. Just going to make it confusing. But the long-term chart you saw was heading higher, and we've been consolidating. And you can see this 34, 35 area has been very difficult, but we've been holding the rising 20-day, which I find very bullish. Went down just below it earlier today. We're bouncing back off of it again. A move back through 35, I think, would confirm a breakout here on MTDR. KOS, which is Cosmos Energy. Here we actually had a breakout, pulled back to the 20. I don't know if there was news out today, but the volume is heavy, and we're getting a 50-day test. Last time we got one of these, we held beautifully. This time we were breaking down on heavy volume. We've come back up, seemingly putting in a bottom with this gap down and the tail from earlier today. We did have a slightly higher price in early October, lower PPO, negative divergence. So 50-day a lot of times is what I look for. We just got that today. I think KOS looks very interesting. Southwest Energy, SWN, or Southwestern Energy, SWN. Another one that has been on a rise throughout most of 2018, at least off that February low. Sideways consolidation, looking for this breakout above 590. 3 more to go. EPM. EPM, big breakout here. And look at the volume. Now, this is one that doesn't carry as much volume as some of the others I've pointed out. If we go back earlier in the year, you can see most of the days were below 200,000. So the average may have even been below 100,000. That volume has definitely picked up over the last 6 months as the stock has moved higher. So it's under accumulation, in my opinion. But again, if it's, I'm not sure if it carries quite enough volume for me to trade, but I would look for any pullback to gap support around 1160. We got almost back down there earlier today, along with this rising 20-day. I think EPM looks pretty good. WTI, W&T offshore, beautiful move up. Again, look at the volume here on this breakout. And now we're coming back down right now, testing the 20-day. It looks like maybe we're putting a tail below the 20-day, and we could maybe close back up above it. That would be bullish here. And the last one I have is NOG. This is the highest scooter ranked small cap exploration and production stock. And you can kind of get a sense why. Beautiful move to the upside. This is a stock that a year ago was trading down below 75 cents. Now it's at $4. It's been in a beautiful move trend to the upside. Look at the volume continuing to pick up throughout the year. Got up to 450, and now with this most recent pullback, just down to the 20-day moving average, it looks like a pretty good area for potential entry here. So those were the stocks I had. Let's pull up a quick summary of the under the radar stocks that we went over. And I do feel pretty good about these stocks because they are in an area that the market still likes. I know we're down today on energy, but the group had been straight up. It could use a little weakness, and we're testing 20-day moving averages. So anyway, some small caps to consider in the energy space.
Excellent. Yeah, it was a little bit tricky. You know, I can tell from what you're saying that I know when the VIX is doing what it's doing and when the markets are so unsure. I know I'm not really looking for symbols to get into, stocks to get into. So I think that's part of the problem. It's right now, you know, my scans aren't coming up with stuff because this market that we're currently in doesn't support my analysis process.
Which is a good thing. I mean, you know, from a bullish perspective, I mean, if you're looking for those rising PMOs that are coming back up and crossing, you're not going to see too many of those when the market's doing what it's doing. So it actually keeps you out of.
Exactly.
Which is a good thing. Cash is always a position.
Exactly. So yeah, right now it's that cash position is getting larger as I get stopped out. So
yeah, mine's a lot larger than it's been in quite a while because, and even I had traded the Russell 2000 just a couple of days ago. I got stopped out almost as soon as I got in, you know, thinking that we were getting down to that support just above, I think it was 1600, and the market just doesn't care. When the volatility index does what it's doing right now, and by the way, the VIX right now is at 1823. The high earlier today was 1937. We've already seen 3 days in a row where we've had the tails on the VIX well above the close, suggesting maybe we were bottoming, but we got a new price low today. So we got to remain on guard.
Yes, exactly. My ultra short-term chart that I showed, it's, you know, that VIX has just been really outside the Bollinger Bands. And, you know, it keeps looking like the setup for the, you know, a turnaround rally, or at least a bounce, you know, off of this decline, but it's not coming in. It's just not doing what it's not doing what is expected yet. So
yeah, I was going into the week. I was a little nervous because we did have that VIX rising at the end of last week, and I think we talked about this. And when I was trying to decide is the market going to go up or down, it was really hard because, you know, when you're getting the VIX up these levels, you can see really fast sell-offs, and that certainly is what we've got this week. But anyhow, there is your upcoming schedule. We got Bill Shelby coming in tomorrow. Look forward to seeing Bill. Special shout out and thanks to Arthur for joining us today. Always great to have Arthur on the show. Want to thank all of you as well for being with us. I know the market's tough. Stick in there. Stay with us. We'll try to guide you as best we can. And please remember to complete that survey as you exit. We do love to get that feedback. As a quick reminder, Market Watchers Live airs 5 days a week, Mondays through Fridays from noon to 1:30 p.m. Eastern Standard Time. Have a great Wednesday afternoon, everyone. Watch that hurricane coming up the southeast, and hopefully see you tomorrow. Happy trading.